As election proceedings draw near, US investors have shown a high appetite towards Bitcoin exchange-traded funds, a traditional finance vehicle that provides alternative exposure to the largest cryptocurrency by market cap. The surging interest has recently been evident in the US ETFs' incessant inflows. In the past 3 weeks, the Bitcoin investment vehicles have recorded a net inflow of $5.6 billion as flows reach their highest level since February. Notably, the BlackRock iShare Bitcoin Trust, IBIT, has seen the highest inflows since the renewed traction. The asset manager has netted $4.4 billion in the past 3 weeks, accounting for 79% of all the Bitcoin acquired among US issuers. Bitcoin's price has remained relatively stable, holding around $69,465, following a slight 0.09% drop during the last day. BTC's dominance has increased marginally by 0.1% to 58.94%, reinforcing its position as the market's leading asset despite low trading activity. Ethereum, the leading altcoin, fell 0.48% to $2,499. Solana has also witnessed a 0.9% drop in price, with the stock now trading at $165.88. In contrast, Cardano is up 4.49% to 35 cents, indicating a good trend for ADA fans. Meanwhile, XRP fell 0.66% to 51 cents. Among today's best performances, Radium leads with a 15.81% increase to $3.61. Monero finishes out the list of gainers, rising 4.04%. Immutable fell 6.97%, while Optimism lost 6.4% of its value. The Artificial Superintelligence Alliance also underperformed, falling 5.29%, highlighting the market's varying performance across segments. Coca-Cola's forward dividend yield is currently 2.9%, which is very attractive for an iconic brand that generates high sales volumes every year. Companies with repeat revenue from customers are typically safe dividend stocks, since the highest sales volume leads to the more predictable financial results. Coca-Cola currently pays a quarterly dividend of $0.485 per share, bringing the payout ratio to 68% based on 2024 earnings estimates. This means the company is rewarding shareholders with an above-average yield by paying out only around 2/3 of its annual earnings in dividends. This is a sustainable payout level for Coke, given the company's growth and focus on improving margins. UPS has a higher forward yield than Coke, currently sitting at 4.76%, close to UPS stock's all-time highs. The shipping giant has increased its dividend for 15 consecutive years and currently pays a quarterly dividend of $1.63 per share. The drawback is that the payout ratio is much higher than Coca-Cola's at 87%, which is not ideal, but there are a few reasons investors shouldn't hesitate to add the stock to their income portfolio. The Dow Jones Industrial Average gained 288.73 points, or 0.69%, ending at 42,052.19. The S&P 500 advanced 0.41% to close at $5,728.80, and the Nasdaq Composite rose 0.8% to $18,239.92. Amazon rallied 6.2% as strength in the cloud and advertising business propelled the e-commerce giant above Wall Street's earnings expectations. Intel popped 7.8% after exceeding analysts' forecasts for revenue and offering strong guidance. The two stocks helped lift investor sentiment following some notable earning disappointments this week. Mega-cap tech stocks are still the tail wagging the dog, said Rob Williams, chief investment strategist at Sage Advisory. They're seeing some broadening, but it's still such a massive component right now.